what we're building at Bunch is two things you can think about it. So really the database for private markets, so storing all the private data points on the LPs, on the funds, on the assets in one place. Then an easy way to ingest the data, whether it's using LLMs, whether it's using integrations, whether it's using manual input, and then automation of workflows to get to the desired outputs, whether that's a capital call, a reporting, compliance returns, whatever it may be. All of this requires the data around the front end that we're trying to store in one place. And around that, we then also offer additional services because we just know that clients, especially in this space, they need special treatment and not everything can be done by software. And so that's why we also have this service component.
Welcome to Finscale, the show that takes you to the heart of finance transformation. Every week, Solenne Niederkorn and her guests explore new initiatives shaping the future of the industry. Enjoy the show.
Hello, everyone. Super happy to have you on the podcast today. I'm thrilled to have Levent and Solenne, the CEO and co-founder of Bunch Capital. Hello, Levent.
Hey, thank you for having me.
It's a pity that we couldn't make it in a studio, but at least we can have that discussion. I'm super interested by what you build with Bunch Capital because this is a prehistoric environment I'm connected with on a daily basis with my activities, and it's not been changing for, I would say, 25 years. The systems are really hard to connect, so it's a huge pain point that you're currently solving. Can you please, before we dig into this, can you please introduce yourself to the audience and say a few words about the reason why you wanted to move in that private asset realm?
Of course. Yeah, so my background, I've worked across financial markets for the last decade. So I started my career in banking in London. Then I worked for a strategy consultancy with a focus on investor support, so really helping PE and VC funds on the commercial side, before then joining a venture capital fund myself. And during my time at this fund, I realized that we invest into these tech companies doing the most amazing things, but the way we operate ourselves is really stuck in the 80s. And I really mean it, like people from the 80s, tech infrastructure and tools from the 80s. And there was no such thing as like an ERP system for private markets. And that was something where me and my co-founder got together and we said, the private markets are booming. So much capital is flowing in. There is like no access to retail investors yet. And if you forecast it over the next 10 years, markets are going to double, private markets. But this is not possible on the current rails. And this is for many different reasons. I think like data transparency, data accessibility, and just ease of use as well as the existing current service providers and the infrastructure is not fit for purpose. And so what we're building at Bunch is two things you can think about it. So really the database for private markets, so storing all the private data points on the LPs, on the funds, on the assets in one place. Then an easy way to ingest the data, whether it's using LLMs, whether it's using integrations, whether it's using manual input, and then automation of workflows to get to the desired outputs, whether that's a capital call, a reporting, compliance returns, whatever it may be. All of this requires the data around the front end that we're trying to store in one place. And around that, we then also offer additional services because we just know that clients, especially in this space, they need special treatment and not everything can be done by software. And so that's why we also have this service component.
Interesting. So you are present in, and we'll dig into this and analyze this further, but you're already present in several countries in Europe. There are different pain points in these different countries. What was the beginning of this journey? And because if I remember correctly, you started with Germany. That was your main market in the beginning. So what was the starting point, and what was the most crucial point to solve at that time in Germany?
Yeah, I think so. We started in Germany because A, we live in Germany, and B, our networks are here. So this was more kind of like a coincidence, if you want, rather than really strategic thinking. But we always thought, like, if you get this to work in Germany, you'll get it to work anywhere else because it's one of the most bureaucratic countries, I think, probably globally. When we started, I think, and still to this day, the most important currency that you have in private markets is trust. And for us, it was always the question, how do we get the trust of the first customers, whether it's the customer that trusts us with their first SPV, with their LP relationships, with their whole fund and the core of their operations. And so this was always and is continuing to be always the challenge, like how do we ensure that the next bracket of customer, whether this is a customer in a new country, a customer in a new asset class, or perhaps a customer in a new segment of the market, that they trust us with their core operations and their data. And this is something that we spend a lot of time on because we want to make sure that the customers can trust us. And this for us is always the one key point that we're trying to solve.
But did you use design partners in the beginning to launch the first product?
Yeah, so when we started, the first customers were really on the SPV side, so it was relatively straightforward in terms of like what needs to be done. Always one capital call, one target, a few LPs, but not many closings, etc. And so we started from that point, and then slowly moved forward and upward into more complex structures. And obviously, always the first customer had I would say, less than perfect experience, right? This is normal because we're learning things. They learn also how to use a new software tool, right? Rather than having someone do something in an Excel where you have full flexibility but zero scalability, to something where you have a little less flexibility, but therefore you only do it once and never again. So getting the people to use these tools, this was, I think, one always something that was a little bit almost like a development partner, but always paying customers.
And the first clients were more business angels or institutional clients. Can you please describe the first persona?
Yeah, so the first on the SPV side, it was definitely business angels. So not very much on the very retail-y end. So not like people investing 500 euros, but rather total SPV size like 500K up to 1 million. So this were like the first, I would say, more professional business angels. And then later it was emerging venture capital funds, so really funds that are either first time or second, third time fund managers. And now we're going more and more towards the more established brands that have 5+ fund generations, perhaps 10, 15 different structures that they manage. So those are more and more the customers that we're talking to today.
So one of the pain points that I've always seen during my career is that for fund operations, you have more complexity in Europe because you have different legal and regulatory environments in the different countries. So you're present also in Luxembourg, in the UK, in another country? Or?
So we're live currently in Germany, Netherlands, and the UK.
Yes.
Luxembourg is on the roadmap. We're not live there yet. But it's true, right? The regulatory environment is different. So the regulator is different. They speak sometimes even different languages, right? But what is the same is the data that they're looking at, right? So they want to understand what is the fair value of the assets that you invest into. What is the NAV of the fund? What type of transactions have happened? What is the AML risk that you have? So in all of these things, they are the same data because they come from the same European guideline, first of all. And second is because those data points, they kind of try to explain the inherent risk of what you're doing, right? So from that point of view, we said what's important and what's scalable across markets is the data. That's why we built the database. What's always going to be similar is the type of documents that you have either on the ingestion side. So, right, like a subscription document, you will always have kind of base LP data, name, text, jurisdiction, blah, blah, blah. They may look different in terms of like the document, but the data points are the same. And then where it becomes sometimes a bit more different is the output, right? So BaFin requires a different output than perhaps the CSSF does. And one LP that you have requires a different output to the other, right? Like a sovereign wealth fund wants you to perhaps upload stuff into their own reporting environment, while others say, I'm happy to receive a PDF report. And so this is where the service element comes in, where you say, okay, well, I'm trying to adjust the data in the format that is required for the customer and their partners. And so this really is, I think, how we think about scaling this across geographies, where 80% of the work is essentially the data collection, the data structuring, making the data readily accessible, and then the remaining piece is something that is done in a service format.
Okay, so how do you manage, considering that the investment requires a deal flow, then you have the investment that is performed and then the exit. So do you have some integrations to ensure that the GPs have the entire value chain covered?
So when we started, we made the decision to focus on two things. So one is we want to focus on the GP-LP relationship. So only the data that needs to be exchanged between those two is the one that we focus on. The second thing is that we focus on the back office. So really all the stuff that happens inside the fund, not so much what the investment manager per se does. Why? We believe that deal sourcing looks different from asset class to asset class, from fund manager to fund manager, right? We also believe that this is something where you have a lot of always flexibility around how you want to do things, and you don't want to be forced into a specific system. And at the other hand, the back office ideally you have a lot standardized because it needs to be audited, it needs to be able to be reviewed. So you want to make sure that you got solid and scalable and repeatable processes. So that's why we say, okay, we focus on the back office, and then the value that we try to generate is between the GP and the LP, because that's also where the back office typically spends most of their time focusing on. Which means for us that we also look at different ways of collaborating with other parties when it comes to front office topics, whether it's thinking about an integration with an affinity or something like that. Now, the affinity is not something that is currently on the roadmap, but other things we're looking at for sure are, for example, portfolio monitoring tools, right? So we know that fund managers in the private equity space, they have a different level of access to data when it comes to their portfolio companies because they tend to be majority owners. And so we then think about, okay, we won't build an integration into the target company's ERP system. There's other players that are doing this, and those would be then the ones that we want to collaborate with and exchange the data that is necessary and relevant for the LPs later, further down the line.
So if we take a look behind the scenes and take a look at the different features that are currently available in the software, what does it concretely does?
So our focus is, we kind of try to say, okay, well, there's a pre-closing phase of a fund, there's a closing, and then there's a post-close. We would typically start covering from the closing and then the post-close world. And so what is it that we do? So in the closing space, we've built an onboarding tool that allows you to onboard your LPs to your fund. So classic subscription document automation, where you can say your LPs can digitally sign into the fund with a qualified electronic signature at the end, AML checks done, etc., etc., and then send out like the closing notice, making sure that everybody's aware that the fund now closed. Then after that, we come into the post-close phase, where we do everything from issuing capital calls, reconciling them, making sure transaction monitoring, the money comes from the same right bank accounts, etc., etc. Distributions, of course, as well, like calculating them, also actually doing the treasury work of setting them up and issuing them to the LPs. Doing callbacks on the IBANs, etc., etc. Then we create the reports. So quarterly, we collect all the fair value of the assets, then do the NAV calculations, create the capital accounts, create the investor report with any kind of portfolio information that the GP wants to share with their LPs as well. We do all the compliance returns, so anything that has to go to the central bank, to the local regulator, to any tax authorities, we would take care of. Obviously do the underlying accounting for everything as well. And then with the people or the partners in our network, also the tax compliance topics. So like statutory accounting that has to be handed into the local authorities, etc. We would also be taking care. AML is a piece where we support. We have partners that help you do the AML checks on your LPs on a regular basis. We collect all the information for this, but we're not an AMLO, so we don't take over that part of the value chain. We don't do ESG, but we help. We have partners in our network that help you collect all the ESG data that you would need, and then can obviously issue the reports to the LPs as well. So anything that you can think of really in the post-close phase, we would be able to either do ourselves or through our partners.
And how do you manage the complexity of a bank account opening for those structures? It's always a burden. I've seen it so many times, and it's even worse in some countries I would not mention than others.
So how do we do this? different ways. So things first, we are integrated with a few banking as a service providers. So
Like Swan.
yeah, exactly, like Swan, where we are able to open up bank accounts for our customers. Sometimes our customers have long-standing relationships with certain banks. They perhaps also receive loans from those banks for capital call credit lines or whatever it may be. So in that case, we would then have to support in the traditional way. So what we would be doing typically is we obviously have collected all the subscription documents and all the ML information. We share with the bank as much as possible upfront, and then if there's requests after that in terms of like, hey, we need this and that new information, we have a simple interface to go and collect that information from the LPs in the name of the GP. So we can help there. But that piece is always something a little bit more, I would say, non-standardized, because every bank is a bit different in how they do things.
I know that. As a former banker, I've seen that you have a capital call assistant, and I find it's an impressive feature. When we know how it's usually managed, it's important to mention it. So
Yeah.
can you walk us through a full capital call life cycle on Bench Capital?
I think there, again, it helps also to talk a little bit about the product again. So when we talk about our platform, right, and the product that we build, we talk a lot about the database. And one piece why it's so important is that when setting up the fund in our infrastructure, we already start storing all the different data points from the LPA that are relevant for downstream processes. So how does management fee calculated? How are equalizations calculated? From when to when? Is it from closing to closing, from closing to due date to due date, whatever it may be? And all of that information is stored in the database. When it then comes to actually calculating the capital calls, the GP has the ability to go on our platform and just provide the most basic information. I want to call $1 million, whatever, from my LPs for working capital management fee. What we would then automatically do is we would calculate on an LP basis what it means in terms of management fee, capital, working capital, if you want, any equalizations that may have to happen because there has been a closing or not, equalization interest, management fee catch up, all of those things then get automatically calculated in our infrastructure. We share those calculations after a sanity check with the fund manager. So the fund manager can then review the calculations. So it's not just hard coded, but actually with the formulas, so that they can figure out, okay, does this make sense or not? And once the fund manager approves, so there's also a commenting function where they can ask questions and then things get clarified. And once the fund manager clicks on approve, we create the notices. So we can create different notices for different LPs if necessary. So the EIF has a different template than perhaps your other LP. Yeah.
A 20 pages template.
Yes. And then the notices get created. The GP can review them. Again, has a commenting function, can reject a few of those if he says like, hey, there is certain data missing, or I want to change the name of or the wording on this capital call notice, etc. And then once they approve, capital call gets issued to the LPs on the platform in a secure way. So they receive an email that says, hey, there has been a new capital call. Please log into the platform to review, because we obviously don't want people to be phished or anything. So all the financial information, financial data only gets shared after logging into the platform. They can then review the capital call. So all the main information that is relevant for the transaction, they can just copy and paste into their online banking if they want. But obviously, there's also a PDF notice that they can download, and that also gets automatically stored in the data room for them, and can then say that the payment is initiated. On the back end, the fund manager can now review what money has hit the bank account and what hasn't. So we track this on the through an open banking connection. We see who has wired the money and who has not, and keep it up to date for the GP so that they can see, okay, of my 25 LPs, 5 have actually wired the money already and it's on a bank account. 10 have said that they wired, but it has not hit the bank account yet, and the remainder has not even opened up the notification yet. So at that point, the fund manager knows who to chase. We then figure out like a cadence where the fund manager typically says, if no change every 3 days, please notify them, and the last 3 days before the due deadline, please daily, and let me know if people don't react, then I give them a call, for example. So we have this kind of type of functionality. And then, hopefully all the LPs wire the money, all the money has hit the bank account, and then the capital call is fully executed.
So you really talk about the mainly the GPs, but you also, your platform is open for LPs, as you mentioned it. How do you think that the fact that it's more automated and more smoother for the LPs changes the relationship? Because GP-LP relationship is built on transparency and mainly reporting. So how do you think you currently changed the relationship between those two different parties?
Yeah, I think it's an interesting one because typically the fund manager has very little interactions with their LPs on a regular basis, right? So you send a quarterly report, and then every now and then you ask for money, and perhaps after a couple of years you start sending them money back. So it's very difficult for fund managers to keep and build a relationship with their LPs. I think an LP portal helps significantly there, where you can give regular updates on different things. You can upload monthly memo on how you think the market is developing, perhaps updates on your portfolio companies. You can send SPV deals to them, right? So where you say, hey, there's a new opportunity in my portfolio, may be interesting for you. So you really have the ability to build up your relationship over a longer period of time, have more touch points with your LPs, which I think is super powerful for a lot of fund managers. And ultimately, though, the fund managers are our customers, right? They buy our services and our product because they want to have more transparency on their processes. They want to have things more automated, and also want to make sure that the LPs have a good experience. But we first and foremost build tools that the GPs want, and not so much focus on what the LP necessarily may want. Which doesn't mean that we don't think about certain things that can help them. So when we think about what we want to be offering, perhaps in a couple of years' time, is we have, I think, 4,000 LPs on the platform. We want to be able to give them Lombard financing. So you have invested into a fund, you have a capital call. You now don't need to necessarily liquidate your stock portfolio to pay for this capital call, but actually we can give you a credit line for this, and you pay X% interest on the money, but you can think and plan your capital calls better.
It's already live?
This is not live yet. No.
Okay.
But this is where we want to get to. I think to do this properly, we need more data, we need more funds on the platform, of course. But then if this is something that our customers want, then we were thinking about offering services like this. Same goes for the fund manager, right? Like a capital call credit line is something that more professional fund managers typically want to have. Also, their LPs want to have it, right? It's the other side of the medallion. So we're also thinking about what we can offer there. There's different services that we're thinking about, but ultimately, I think this is the beauty of having the data in the database and easily accessible. It allows fund managers to access these types of financial services more seamlessly.
So if we now focus more on your expansion in the different countries, so you mentioned the Netherlands, UK, Luxembourg, and Germany, you have different ecosystems. Luxembourg would be more, I would say, institutional fund managers rather than in the Netherlands or Germany, where it's more, I guess, BAs or semi-professional investors. So how do you address those different countries to have a proper go-to-market strategy?
Mm-hmm. I think generally what we see is that the fund managers, they all have the same problems, and they think quite international, right? So in today's world, if you're a fund manager that raises a 200, 300 million euro fund, you typically tend to be not just in one country. You typically tend to think about, okay, where do I set up my next fund? Will this be still in the jurisdiction that I'm in right now? Will this be in a different one? There's also a lot of flexibility and ability to move for those fund managers. So we see that the go-to-market is relatively similar, right? We speak to the fund managers, whether they sit in London, UK, or wherever, in the Netherlands, or in Central Eastern Europe, or in Turkey. And they're all quite flexible in terms of where they want to set up their fund structures. So that piece is similar. What we then need to obviously become good at is have the right experts in our network, which is law firms that then help the fund manager figure out where they want to set up shop.
Mhm.
And then we just need to be able to service them. So we need to be able to be on the ground. This is why we said, okay, many of our customers in the beginning, they wanted to have Dutch fund structures. That's why we went to the Netherlands. Now we see that a lot of them also want to have Lux structures, and that's why we're moving to Luxembourg. And this is just the nature of the business. I think one of the things that makes a platform like ours valuable is to be able to be offer and service your customers wherever they want to be serviced. And so this is really, I would say, one of the core focus that we have.
So you talked a lot about the fund administration part. Is there any interest in your strategy and in your vision to also address the fund management, the AIFM side of it? So becoming an AIFM, is there any interest? Because there is a huge market here for third-party AIFMs. So is it something that is on your roadmap currently?
So actually, we have a registered IFM in the Netherlands. So when we've used it as well already, so we have customers that pay for those services. It is not a core focus for us at this stage because in terms of scalability, we don't see it has the same impact that we see the fund admin piece and the potential that we see there. Second, it is a whole new set of processes that we have not yet really figured out.
Mhm.
And third, it is also tends to be even more tightly regulated industry where the regulator wants to make sure that definitely portfolio monitoring, portfolio risk management, etc., is all done according to their standards. And so we obviously know that there is a lot of value in this, and we obviously also know that like to build this into a $100 billion business one day, we need to be offering those services as well. But just in terms of like timing, we'll probably focus on the admin piece for the near future, and then review the fund management piece after that. But I think there is also a big argument to be made to say we just do the fund admin piece and collaborate with all the people that focus and specialize on the IFM piece,
Mhm.
because there's also a lot of players that offer that but do not offer the fund administration.
And in terms of verticals in private assets, are there some that you focus or more than others?
So we currently fully focus on venture capital and private equity. We have a couple of fund of funds that invest into venture capital or private equity funds, but not so much any kind of real estate, infrastructure, etc. funds yet.
Not yet.
Yeah, it's something that ultimately we will want to look into, but for now, I think we still have a lot of room to grow in the asset classes that we're in. And it's all about focus, especially in the beginning. So we try to focus on what we know how to do, where we build automations for portfolio reporting, KPI collection, et cetera, before then saying, okay, now let's think about how we make real estate great. But this is something that at some point will also be come on the agenda.
And how do you see the market evolving? Because it's been very hard for private assets those last years. Many pension funds have reduced also their investments in private assets.
Generally, there's a secular trend, right? Like assets tend to stay private for longer because there's just a lot of more flexibility in the private market compared to the public market. Private markets have become deeper, so there are deeper pockets there. And if you look at the tech space, right, like companies like Stripe, Revolut, etc., they're multi-billion-dollar businesses, and they don't even think about going public at this stage. And so this is one of the very, very big trends that we see. And on the back of that, this will continue in the future as well. Why? There's obviously blips, and you see perhaps capital raise this year is not as high as last year, et cetera, et cetera. Those things happen. I think there are a lot of questions around like when do people see liquidity again in their private assets portfolio, right? So there will need to be a second on a new wave of exits, M&A. I think we see that there is a lot happening already. The pipeline is full and ripe. So, and I think once that starts opening up again, and we see a bit more exit liquidity, that then also the primary sort of fundraising market will ease up again, and there will be more funds being raised. So we are relatively relaxed and actually very optimistic about the future. There's still, I think, 150 trillion in assets and retail money that has zero exposure to private markets. So if you just say that they get to 10% or so, which is, I think, what the average high net worth individual has in private markets, that's already doubling the private markets again over the next 10 years. So we tend to be quite optimistic about the future of private markets.
Good. I've seen that you have raised quite huge amounts of money, and you have a strong ambition in modernizing these private markets realm. So what is your ambition in the 5 coming years?
Yeah, I think so. We want to become the de facto player for venture capital and private equity funds in Europe. So we want to be able to offer them everywhere, service our customers everywhere in Europe, and really make it clear that we can service them in the best way using technology and software services at the same time. After that, I think after successfully launching Luxembourg and potentially adding 1 or 2 more jurisdictions in Europe, you're also kind of done. I think you don't need to be in every country in Europe, right? There's no value in offering fund structures in Bulgaria if you can then actually think about going outside of Europe. And so we're thinking there is the traditional fund domiciles outside of Europe. US is a big one. I think Middle East is growing and has been showing very, very big potential, but also East Asia, Singapore, Hong Kong, India is up and coming. So there's lots of opportunity, I think, to grow. For us, the main focus is for the next 4 or 5 years, making Europe great in private markets, and then after that, see where else we go next.
Perfect. Thank you very much. So, Levent, my last word during the podcast is always a recommendation from my guest. So what would you recommend to us today?
It's a good question. I think today is a sunny day, so perhaps go out and have some sun. But jokes aside, I think we see that there is a lot of potential in private markets. We get very, very excited about this, and I think it's almost like what public markets felt like 40 years ago. We see so much opportunity to build stuff in this space, and we see so much opportunity to professionalize private markets as well, compared to where they currently stand. So I think everybody should think about what are the things that they can improve in their own processes, what they can improve for others. And I think we live now in a very unique moment in time where a lot of the cost of building stuff or improving processes is going down dramatically through LLMs, which essentially allow you to do complex pattern matching relatively easily and cheaply. And so everybody should question and challenge themselves whether the processes that they do today, whether they can't be done differently in the future, and then try and find a nice solution for that.
Perfect. Thank you very much and good luck.
Thank you. Thank you for having me again.
Bye.
Thank you for listening to Finscale. Don't hesitate to subscribe to the newsletter on Substack to stay up to date with the latest innovations. You can also find the podcast in audio format on all listening platforms and in video format on YouTube. See you soon with Solenne Niederkorn.